The US dollar continues to attract investors. The fact is that the FOMC meeting minutes confirmed the Fed's intention to go on raising the benchmark rate. Officials of the Federal Reserve suppose that monetary policy tightening is an effective method of slackening still high inflation. In our video review, we will find out how the publication of the protocol affected European currencies. Today, the Eurozone disclosed its final inflation figures. According to the revised data, in January, the consumer price growth slowed down to 8.6% instead of 8.5%. The initial report does not contain Germany's consumer price dynamic because of technical reasons. Notably, inflation remains very high and is still far from the target of 2% per annum. It means that the European Central Bank has to continue raising the benchmark rate at the previous pace of 50 basis points. Meanwhile, the situation in the currency market is quite calm. The euro-dollar pair is still hovering near the support level of 1.0600. It seems that traders expect a decline in the pair. If pressure on the euro strengthens, it may nosedive to 1.0570. However, it's still difficult to predict what factors may lead to a decline. It's quite possible that news from the United States may encourage traders to buy the US dollar. The US is going to disclose its unemployment claims data and the second GDP estimate for the fourth quarter. Both reports are of minor importance, thus traders will have to wait for the comments from the United States Central Bank or the consumer spending data that is slated for release on Friday. Meanwhile, the pound-dollar pair stagnated in the sideways channel. However, investors continue to buy the pound sterling. If the currency does not drop below 1.2024, it may climb to the levels of 1.2146 and 1.2175. And that's all for now. We continue to learn developments on financial markets. Subscribe to our channel and follow news with us. See you soon.